My mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash. I'm building wealth, $1 at a time. Going from broke to living the life that's prime.
What's good, everybody? It's your boy Reckless Red and Arrow. We are back at it again for another episode of Future Financial Strategies. I hope you're ready to buckle in. This is a special episode. It's the first of the month episode. It's the first Monday of the month. Welcome to October, people. I know it's starting off a little bit shaky, but I am excited. I am excited because of the growth that we had last month. You guys already saw the monthly financial update. We done full spectrum for y'all. And now we jump into the portfolio, which is important to me because the only people that I've seen that show their actual accounts and portfolios are the people in the high invest income dividend space. High yield dividends. For some reason, we actually show all the receipts. We give full transparency on our accounts. And nobody else does, but everybody has an opinion on it. It's crazy to me. It's wild. It's amazing when you have people who are actually getting it out the mud, getting it and working. Now, me being the brokest of all of them, like I'm telling you, I'm probably the brokest person in the high yield dividend space. I look up to all the other guys because they all got more money than me, and I'm happy for them. There's no edge on that whatsoever. But I guarantee the salary. Actually, I'm not going to guarantee it because you never know anyone else's situation. But I can tell you for sure that I am making a strong assumption that I make less in salary than everybody else in this space that's talking about money. Guaranteed. That's giving full transparency and showing like what we're going through, trials, tribulations, wins, losses, all the things. It's just me. Like, look. I mean, my collar is even doing some weird stuff over there. That's how, like, we out here struggling, bro. We struggling. Now, first and foremost, we want to give a shout out to the sponsor of the show, Delta. Salute to Delta. We have the Delta Investment Tracker app. I also use it. It tracks my brokerage accounts, so that way I get my up-to-date news on all things within the spaces and the positions that I have chosen to invest in. And I love it. So if you haven't checked it out, check down in the description. There's a bunch of Easter eggs down there, some things that add value, some things that are tools that I use in my daily financial escapades and adventures. But Delta Investment Tracker app has a referral link to let them know that you found them via this channel. I don't really get anything for that. That's not the agreement that we have. And being a micron influencer, I'm not even a micro influencer, I'm a micron influencer. I want to invite you guys to subscribe. If this is your first time catching the content, if this is your first time finding my channel, feel free to subscribe. I definitely urge you to subscribe. I'd appreciate it if you subscribed. Also hit the like button on your way in or on your way out. Whenever you see this, hit the like button. We need that. It lets the algorithm know that you like my content, and maybe it'll show up on your feed as I do these updates, because I'm posting 2 to 3 videos a week. And then here pretty soon, we'll be getting back into some random impromptu live streams. So you guys will be able to ask your questions live on Guns and Butter because it's coming back. It is coming back. I am working towards that. What else do we got? Life's good. Had my doctor's appointment. The Achilles is healing. Not necessarily. I mean, it's healing in a timely fashion. It's not as timely as I want. So now when we get back into the gym, we're going to be working that tendon even harder because I want to get better faster. So, but the doctor's appointment was good. So we've got that going for us. I think we're going to just go ahead and just dive right into it because these episodes are kind of a little bit different. Now we start this off twofold. First, I like to show you guys the account. It's important. Reason being is this is the receipt. So a lot of people will just pull up the analytics software. Technically speaking, I could plug anything I freaking wanted to in there and it wouldn't necessarily be real. So what do we do over here on Future Financial Strategies? Because we keep things real, I make myself really small. This is my Charles Schwab account, people. We can look, we see the day change, we see the 6-month change. You know, that's pretty nice because I'm constantly putting money in there. I didn't realize I put that much money in over the 6 months, but there's that plus the growth, whatever. As we get down into these portfolios, this is where it gets a little squirrely. We've got the long-term holds, which we're going to actually, you know what? Let's jump into long-term holds first because I've instituted a new philosophy here because I have a Bitcoin standard, but I figured we got to start beefing up these long-term holds. So we're going to jump into long-term hold portfolio because that's not in the analytics tracking software. I specifically use that for dividends. But as we can see, my portfolio, which is predominantly one stock, it's DEFTF, DeFi Technologies. Big fan of that. I believe it is undervalued. So I've got a little bit more to buy where our target there is a target of 1,000 shares. Currently, I have 475 shares, so I've got 525 more shares of DeFi Technologies to get before I am seated where I want to be. I was trying to do that before it got to $2. It's dropped below $2 again. So we're going to probably be doing some buys there. The other addition to this portfolio was MicroStrategy had a stock split, which put this in a position to where it is affordable for me to buy. That doesn't change the valuation of the company, but knowing what I know about the cryptocurrency space, this is going to be one of my long-term holds. So we're adding a share. How are we doing that? I'm just adding one share, a check, every time I get paid. So when we do the big dividend payout, after all the stuff is paid back, we're allocating one share of DeFi Technology out of the payment that we get from our dividends as well. So I should be touching on 3 to 4 shares a month. We're doing that for the rest of the year so that we can get this bag up, because my goal for this year is to get to 10. And so I think if we're getting 3 a month at least, we'll be close. There's going to be 1 month where I might have to buy 2 because I've got 3 months left. Or October, November, December. Yeah, 3 months. So I should be able to hit that target of 10 shares of MicroStrategy. And then along the way, we are also going to be picking up some DeFi Technology. We got to get that bad boy up to 1,000 shares because that was the target, because it was inexpensive when I started buying it. And as we can see, the total gain loss on this portfolio is in the green, 7.67%. And I think as we get into the bull run, as crypto starts running definitely through 2025, this will jump up. I will probably be letting loose some of that DeFi Technologies position and rolling that into a different position. The other position that we have in here is BETH. Now, my goal for BETH is to get to 100 shares. BETH is expensive, so we might be switching this out with a different income producer for the bull run. But as of right now, we've got the drip feature turned on this, which you do over here. For those of you who have Charles Schwab, if you're not sure how to turn on drip, this is how you go over to the reinvest column and you just click on it and you go, do you want to reinvest your dividends? Reinvest. You click yes, click update, and it saves. And then you have drip on. You can also switch this, click the update. Oh, I think you can only do it once a day. But normally when you come in here, this would be optional to, oh no, you can click it. Okay. So it doesn't look, okay. So on the computer screen, that's interesting. I didn't know that. I don't know how to do this from the phone, so I only know how to do this on the computer. But you click it, you click on no, you click update, it'll change it. If you click yes, it'll change it. Now, I just noticed this, that when you pull this up, these both look grayed out. So that's something to keep note of. It looks grayed out when you pull it up, but you can click it and it'll switch, and you click update and it switches it. That's how you turn on drip for those of you who have Charles Schwab. Don't ever say I didn't give you any gems. But BETH, my goal is to get 100 shares because generally speaking, I would like to get these positions to $100 a month to where there's just $100 a month kicking into here. Unfortunately, as it sits right now, that is not necessarily happening. We're getting a little bit, but I'm going to have this just roll over and just drip until we get to $100. But I'm also probably going to be switching that out this month, most likely, because I can sell it at a loss, get that switch in, because we are down in the total. So, do some tax loss harvesting, switch that into a position that's going to be easier to get to 100 shares, something that's going to kick off roughly $100 a month. And then, that way I've got a little bit of income coming into this portfolio. You guys know I love income, so there was no way that I was going to have a portfolio and not have some income in here. But yeah, that's what I think we're gonna be doing for this month with the long-term investments, and then also adding in that share of MicroStrategy per check, building this up to 10 shares, and then we'll see if we want to ride it or not ride it. Yeah, that's what we've got. Let's go back to the summary page. We'll get over, as you can see, the income portfolio. We have a total on that. Go in here, we can revisit the positions. We've got Coney, Misty, Tesla, and Ulti. Now remember, this Ulti position is getting reinvested back in. Now, as this sits here, you'll notice, and this is the reason you should use dividend tracking analytics software, because the total gain loss is not accurate. It says over here that we are down 13.37%. The issue being, we've made more money than this. People, almost. We're down a little bit, but not that much. And it doesn't calculate the dividends that have been paid out, because obviously what I do with the dividends, I believe, is my choice. And what everybody else does with the dividends, I'm not just incessantly reinvesting. I'm doing things a little bit different because, again, I don't have as much money as these other traders on here or investors that do high yield dividend, where they can just leave the money in here and they're just cycling it back through just for the F of it because they can. I'm actually using this to manage the debt that was used to set the account up. So you're getting real world experience with this, right? But it shows the positions. So all three of these positions are used to manage debt. The Ulti position, which we have a target of 500 shares. We aren't quite there yet. We're about 99 shares off, actually. It's exactly 99 shares off to get us to a round number of 500. But the Ulti position is cycled back into this portfolio. So that way, if I'm really dialed in on my velocity banking and I'm using every single thing else, I've at least got $500 that gets back into here. And now that Ulti pays towards the end of the month, that's actually pretty nice, because then I can just buy at the end of the month, slight discount, because normally they're recovering from their other payouts. But I also have the ability to cash in on the next cycle's dividend. Now, Misty is fully positioned. As we can see, we are down a little bit on this position, but this is paid out. We are within scope on this. We want it to be roundabouts $10,000. We are looking at the Misty position. We are set. Coney is next in line. We have actively been buying Coney. We've actively bought some Tesla. I got that up to $100 because I wanted an even 100. I like getting over $100 in dividends. If I'm not getting over $100, I kind of get a little bit perturbed, if you would. And then the Ulti position, obviously, we're getting a good chunk off that. When it pays out, it obviously fluctuates. But once we get around to that $500 marker, I'm going to be pretty set on this, and then we'll start working on the next self-sustaining position. We're probably gonna be looking at a weekly payer for that. Not 100% sure yet, but I'm thinking it's either going to be that or it's going to be YETH. I'm really liking the YETH, Ethereum, given a little bit more volatility than Bitcoin, but getting some YETH. I'm already Bitcoin heavy. I've got 2 Bitcoin affected stocks. I don't have anything that's Ethereum affected per se, so I might do YETH for secondary income payer after we get Ulti to 500 shares, and just drip that until it gets up to a point to where it's paying over $100 a month, and then we'll let that ride out as well. But so far, that's what we've got. So now we're going to move it over to the next software so you can get an accurate look at what the portfolio is actually doing. Now, let's see here. And so this is actually, hold on, let me refresh this really quick. Okay, so this must have pulled close of business because this is still active unless I did a buy today. Oh, I know why. Hold on. I want to show this too. This is actually pretty interesting. So as you can see, the total cash value is negative 145.79. I accidentally, and I've done this twice now, but this was when I realized that I could actually pull my margin out of this account. So the discrepancy between this and Snowball Analytics right now is I was trying to put 145.70 into my portfolio and accidentally pulled 145.70 out of my portfolio, and the margin taxed me 9 cents for the day. Actually, it's 146. I pulled out 140. What did I pull out? Damn, I didn't even type that in right. Okay. Well, either way, I meant to put money in and I accidentally took money out. It was a real bad deal. So I'm going to have to put the money that I took out plus the money that I was trying to put in tomorrow. So that way I can buy some stocks because I was planning on buying a few shares today. So that's the discrepancy. Going back to the analytics page. As you can see, the total profit, this is including the dividends that have been paid. I am at negative 0.6, which is cool because like we spiked up and I actually got to touch the green. I got to see the total portfolio and profit. But this is the exciting thing. So from last month to this month, we increased our income $234. How do we do that? Because we're constantly buying. We're constantly buying. Always. And what's the result of that? Well, the next 12 months, we're projecting that we're going to get $17,210.75. This month, it's projecting that we're going to be sitting at just under $1,500. Now, actually, let me pull this up because I got some new numbers. Got some new numbers for you. So we're going to, because 1,500 was supposed to be a big marker, and now it is not, even though we are right there. Let me go get into this because I re-updated my numbers, and this is something that I think that people should be constantly aware of. So where did it go? There it is. So I updated my numbers. I don't think that's right either. Hold on a second. I'm updating my numbers again. Hold on. Hold on a second. I'm scrolling through here. I'm like, where did I put this? Yeah, there we go. So I did an update. So like I'd originally done, I always call it cutting to the quick, which is the bare minimum to sustain my lifestyle where I'm at right now. Like you're doing the bare minimum. So basically I'm factoring in the things that I feel that I need, minimal amount of creature comforts, and being able to pay for my existence. So mortgage, utilities, car, food, all that stuff. And I went back and redid the numbers. And do I not have the phone in here? Nope. Phone. So, and this is the reason I constantly keep looking at this, because I'm like, this keeps changing. But the other numbers will 530. So my monthly expenses at a bare minimum to exist at this juncture with everything, if I was paying for everything myself, if I'm and I do this, the reason I do this, and a lot of people will cheat this system, but, and I'll tell you why you shouldn't. 2530 times 3. Okay, so I'll tell you why you shouldn't do that. And I'll tell you some of the things that I have on here that some people might not have on here. The reason that you should make sure that this is as accurate as possible and as worst dire straits as possible is because when you got to cut to the quick, 90% of the time you're going to end up in worse dire straits. That's where you're going to be existing. So knowing that number means that, like, you lose your job, you come on hard times, you know exactly what you got to go hunt for. So for me, that's exactly $2,530. And that's with cushion. I've factored in a car payment I don't have. I have factored in reinvestment, a minimal amount, because I feel like no matter what, I should be feeding to at least a little bit of money back into the machine that I'm using at this point to exist off of. Because this is going to also be fluctuating. So you always want to be creeping that up, even in dire straits. So what do I have on my list of the quick? First and foremost, Spotify. Music is important to me. And I don't like commercials. And that is actually a value set. Like, I'm not giving that up. I'll not go out to eat before I don't have music with no commercials. Like, it just is what it is. Number 2, my gym membership. I'm going to the gym. It is a value set for me. It is a part of my lifestyle. I will not go to Starbucks before I won't go to the gym. It's probably why I'm not dysgenic. It's why I'm in good shape. I take care of myself. Number 3, Netflix. Now, the Netflix is questionable. I would maybe cut that off if I absolutely needed to, because I can find stuff to watch on the computer. But, like, I do like to, and I don't even get to use it that often. But when I do want to use it, I want it to be there. It is a creature comfort that I factor into my home experience. Not gonna lie. Now, could I just, if I started up in my movie repertoire on Apple TV and just had a bunch of stuff that I could watch whenever I wanted, absolutely I could do that. I also have my Amazon Prime. I could definitely do that. I could find something to watch. So honestly, if I cut down to the quick, I could get rid of Netflix, to be honest. I wouldn't like it because I like a lot of shows on Netflix, but I could get rid of it. My mortgage, fully loaded. I'm assuming if I come on hard times, everybody has come on hard times, and like maybe people got to make some different life decisions, or you're coming on hard times and everyone else is doing great and they're going to make some pivots, and I've got to pay for this place entirety by myself. So that's the way I look at that. Also with the utilities, fully loaded utilities by myself on average, like just the worst case scenarios of what I'm looking at that I'm paying. And that includes internet, because internet I consider a utility. Like I factor it like the water. I can't have it turn off. I can't do it. I need the internet. So the internet is also factored in. I include that bundled up with my utilities. My phone, my cell phone service. Gotta have that. Gotta have the ability to communicate. I figure you need that to get a job, because if I cut to the quick, I'm going to go start Ubering again. Basically, like if I fell on hard times, like worst case scenario, I know I could go do a gig job, and I can go muster up basically the $2,500 that I would need to subsist at the exact lifestyle that I have now. Now, a few of these things are going to be variable, because if I don't have a job or I don't have to leave my house, then there's some of these things that I might be able to skim on, but there's also other things that might get more expensive. So I don't even know. But the thing that I did with my mortgages, I added in extra money on top of the mortgage just in case. I like to have a cushion there. I like to worst case scenario. Taxes go up. I got additional expense on my mortgage now. Mortgage went up a little bit. And as I go through the year, if my mortgage does raise, I adjust this number on what the quick is, because this has to be ever scaling. I've got to make sure that I'm covered no matter what. And I like to have that cushion of just in case, because as we've seen with the dividend income, it's variable. Highly variable. These people are out here working in the market. I got people working for me in the market. Yield Max is out there working for me in the market. So it is important that I have that cushion. And the reason I over project is so that if it's a short month or some of the stuff's not performing well, I'm still good. That's the important part. So then we've got phone, we've got fuel, which fuel would be one of the ones that go down. Because if I'm not working, if I'm stuck at home, I'm not driving. So fuel costs could be substantially lower because I ain't going nowhere at that point. Like, realistically, until I find a job, like I'm not going to be moving a whole lot. I'm not going to be moving, shaking, going out places. The car payment doesn't even exist right now, but it could. I'm getting ready to get a new car. So for a little bit, I'm going to have a car payment, probably for about 12, 36 months. Depending on how the dividends are rolling in, because we're planning on paying that car payment with the dividends. I'm planning on paying that car off early. Food, $400. Now, if I'm not moving a lot, I will probably be eating less because I'm really bad about eating. I'm really regimented because I'm at work. Now, that's another one that could be variable, because I doubt I'm going to be eating more than what I'm eating right now. I would probably curtail myself down to less food because I'm going to be less active, so I don't need as many calories. I'm not trying to get fat, so I wouldn't be sitting at home eating sad. And last but not least, the investment money, because again, you got to feed the machine even in hard times. I believe that should be part of the budget, especially since this is a passive income. Because if I lost my job and my passive income can cover it, then like I don't have to go back to work. That's work optional. I can make some moves. So that's the important thing. Now, based off of that number, off of what your quick is, what your utilities that you regularly need to have are, you can gauge when you can retire. It's interesting because everybody tells you need $1 million and a bunch of assets, so you got to eat off the assets. But if you have passive income, that's a different metric. You could technically retire. In this case, I will be able to retire before I become a millionaire, because it doesn't take $1 million. Like those things aren't mutually exclusive. There's a lot of people that are worth $1 million that have money that's locked up they don't have access to. It's their house, their 401k, your Roth. I mean, the Roth at least you can get some money back within 5 years after you do it. But most of the time, it's in a lot of that wealth because of the way they miseducate us into getting into the financial game. We're hyper focused on investing in things to build our net worth up that we don't have access to. So technically speaking, I don't factor that as your money. So you're not gonna downgrade your house. Nobody downgrades their house. No one sells their house. You sell your house to upgrade. You're gonna go get a bigger house and a bigger payment. Your 401k, you're going to get taxed to get into that. So that's not your money until you're 65, because they want you to work till you're 65. And like some of us don't want to work till we're 65. Some of us don't want to have to work till we're 65. I had somebody come at me on a comment that I made, and it was a bunch of old dudes that are in their 60s. You know, they're oh, I'm getting ready to retire at 60. You must have done something wrong. And I was like, I'm about to be out the game at 43, bro. You might want to ask yourself what you did wrong. Why did it take you so long? Like, I can tell you why. We have the internet. We have the ability to have the information. We have the ability to re-educate ourselves on how the financial system works, on how these financial markets work. And we have the ability to go seek out the tools so that we don't have to just gruel ourselves to be bitter old men that are telling all these young whippersnappers that are like, yo, like, this is the slowest possible way to retire. And then they get mad. And I'd be mad too, honestly, if I just did what I was told and then now I'm going off into the sunset. But the funny thing is, a lot of them are going to have to go back to work because they don't have as much money as they think they do. Because there's fishy stuff going on with the fees within the 401k system. It's wild. So now you're not actually able to retire and you got to go be a greeter at Walmart. So anyways, there's two metrics that I look at for when I'm going to be work optional and when I'm going to be able to go, yo, like this probably isn't even going to be worth my time to come in here. Work optional is 2 times my cut to the quick salary because I'm not spending too much over that right now. And so as I'm sitting here, actually, let me pull this back up real quick so I can see the numbers. My work optional number is $5,060. Now we have a target on here of $60,000. So I was close. It's close. I knew close to what I needed that I could live comfortably on because I'm almost at the quick now. Like I don't really do that much. Like to be honest, like, and if I had an additional $60,000 on top of what I'm making now, I'm well into the 6-figure range. And it's passive. So that's my work optional because at that point I can start saying no to things. I can start taking more time off. I can not necessarily have to grind as hard as I'm grinding. Like we'll be back down to some 45, 50 hour weeks. We're not doing no 50 plus 60 hour weeks. Like I'm going to be really focusing. And like at that point, like honestly, I'm probably going to work for another year and really focus on grinding out, getting myself back on track health wise. Like I got a bunch of stuff that has accrued over the years that I'm going to be dialed in on to get sorted out. I'm also going to be traveling a little bit more. Then I've got options. I got flexibility. So what's my leave the workforce number? $9,500. Why that number specifically? I liked it. And it was higher than 3 times my cut to the quick number. Because I'm not the type of person that necessarily expands my lifestyle. I don't really do that. Because I've got myself in a space with money that I really, especially coming from the cryptocurrency space, like every dollar, every cent, every quarter, I'm looking at it. I'm like, is this going towards something I want? Like, do I want this? Is this what I want to do? Like, is this how I want to be? And a lot of the time, the answer is no. So when it comes to things like that, I am very meticulous about spending money. Like I'm not throwing out money here to like flex for people. Like I get cars when I need them and I drive them into the dirt. So the next car might be it might be a medium flex. Not gonna lie. I'm getting something. I wanted the Lexus that I have now. I wanted that car. Like I drove that car and I was like, this is the nicest car I've had. And I've had some cars. I've had some decent cars, I guess. Decent. But it was a really nice car. I like it. It's hybrid. It gets really great gas mileage. I enjoyed it. But now that when I had to go get my head gasket redone, I was like, that's it. Like, it's time to trade this bad boy in. I needed to limp along for another 6 to 12 months. And once we hit some certain metrics and get a certain amount of debt knocked off, we're going to make some moves. With that said, I only get stuff when I need to. Like, I've had that car paid off for almost 6 years, and I was fine about it. Like most people pay their cars off, and like within 6 months after they pay it off, they get a new car just to keep. Like I don't know, like they're addicted to the payment. I enjoy not having a car payment, to be honest. And as long as I'm enjoying the car, it ain't that big a deal. But like I'm in a different space in life, and the head gasket blew. So like now that it's time to get a new car, I got to get a car that's for now. Like that was then. Now we got to get a car that's now, and I got a couple of different requests that I need from my car. So it's gonna be a little bit nicer one way or another. And it's either I'm still torn between if I'm going full EV or not. But I don't think that I'm going to be getting another hybrid, unfortunately. So now I'm going to be paying gas price. Like I'm going to be buying gas, like because this is semi-flex. I can afford it, but we're gonna see. We're gonna see what it is, but. For me, I'm real comfortable at $9,500 a month. Now, will I keep? Now that's factoring in. I'll have so much money to invest because I don't spend money on anything. So even at those numbers, even when I get to the $5,000 a month, once I get to that passive, I'm gonna have so much money. Like it's gonna be ridiculous because I won't be able to. I mean, obviously, if you try, but like, I don't think like that. So I'm going, okay, well, like, we're just going to keep reinvesting this. And like, once you get to certain amounts, like, we're seeing the growth in income month over month now. Like, now it's $234. Like, last month was a bigger leap. It was $806. The month before that, it was a bigger leap. It was $935. So like as this starts spinning up, like you're seeing the income increase. Now, like, is it going to be big leaps every month? Like, no. But there's going to be big leaps as we get more and more into this. Yes, there will be. Because that's how a snowball works. But you know, I'm feeling really good now. Like we're almost at the $1,500 mark. It is kind of a next step, but that 5,000 when I get to work optional, whoo boy, howdy, it's going to be great. And it's going to be really exciting. But when I look at these numbers, I'm also factoring like about 400 of it. Well, no, because last time when we were all in, after we got all the payments out, it was over $1,000 that was allocated towards debt repayment. So this month, we're supposed to be getting back on the velocity banking. If it's going to be a bloody month, I might hold off another month and just really dial in on focusing on building this portfolio out and getting that additional income for when stuff pops off and it's good. Because we've still got another what? Like another $20,000 for the phase one of this. Well, not 20. So that's market value. That's 3, 4. Yeah, we'll just say 4,000. So basically another $16,000 to go. Like that's a grip of money. And like while my savings are up, like that, I mean, that's nothing to shake one's nose at or wag their finger at. Like that's still a good amount of money. So as we're building this out, that's like one of those things that I always stress to people is like, have your numbers and then up them a little bit, give yourself a little bit of cushion, and then make it a worst case scenario. If you're only paying half the rent or half the mortgage because you got somebody with you, assume that they leave. What if they leave and you just got to pay for this yourself now? Don't get into situations to where it's not something you can manage yourself. Because if worse comes to worse and you got to cut to the quick and you based your whole budget and you're like, oh, I'm retired and it's passive income, and then that person leaves, now you got to go back to work and you looking goofy. Also, it's important. Another one of the things that I have on my list that most people don't, it's important to have the reinvestment money because you want to continue to have that portfolio grow, especially if you're using high income dividend strategy. That portfolio is specifically about generating money. You've got to feed that machine to continue to keep the money generation going up. Something's got to give. Like you gotta, it's like a car. You got to put gas in it. Money, capital is the gas. It should be ever growing. That way, if your expenses go up, taxes, inflation, you can't be set at one amount and then expect to just survive off that. Ever growing. For those of you who are just recycling this back in, that's a different conversation. Because if you look at here, this goal could be achievable next year if I was reinvesting everything right now. I won't be able to do that until it's completely paid off. But with the way that we're cycling debt, this gap would get closed faster because we would be able to pull out debt, take the loan, front run this, get buys in, and increase that income faster. So I think in 2025, I should be coming on the tail end of the debt. We got a couple of moves left to make, but I should be coming in on the tail end of the debt. And At some point during that bull run, once we clear it and we can just reinvest, then all debts that we pull, all large debts that we pull, will be primarily focused on building the portfolio, the income portfolio specifically. Probably going to be getting a little bit into the long-term portfolio. I've got a couple of like at least one more family portfolio that I'm going to spin up because we're doing better than expected. And I'm trying to make sure to plant those seeds for the next generation. So that's just one of the things that I'm doing until I get some kids of my own, I guess. But that's going to start hyper accelerating once we get cleared out of all of these, provided we don't have any more accidents or major medical issues. We should be trucking right along, and like that process is going to speed up, because then every month I'm going to be pouring more money in, because I'll either be front running money and then paying the debt back, or I'll be coming out of the salary checks, just like I have been, and saving as much money as I can, just like I have been, and making some plans. I do have a couple of things that are going to be on the expense list that I'm doing. I'm definitely trying to go to Bitcoin Nashville next year, and I'm planning at least one trip out of the country. Pretty sure I'm going to try to hit Japan. That's kind of where I'm dialed in on right now. And, we'll see how that goes. But that's where we're at with the portfolio. I mean, I definitely would like to hear your guys' feedback in the comments, because we're tracking this every month. So you can go back. It's specifically the portfolio updates, not the crypto portfolio updates. This is my traditional finance portfolio. For those of you who are detractors, this gets updated every single month, good or bad. Good or bad. So you can go back and track and see how this is going, because like the income is showing up. It is coming in. It is being distributed. I'm giving the receipts. I'm showing the Charles Schwab portfolio before we jump over to the Snowball Analytics portfolio. The reason we use Snowball Analytics is for this right here. You get a total profit readout, so you know where you're actually at. That's actually the important part, and the reason that I definitely recommend using a analytics tracking software, because this number right here, a lot of people don't get to this part. Like, they're not factoring in the income that's being generated. And it doesn't matter that I didn't invest all of this income back into the portfolio. What matters is it came in. That means I got the money. What I do with it is my choice. It's the same premise as if every time a stock went up, you sold some of it. The stock still went up. You still get credit for the profit on it that you got. You just sold it. Now, if you don't have it, that's on you. But it's weird to me that like not the platforms don't give you that. But I also think that they really don't want people in this space, because they don't want you generating income. They don't want you not having to go to work. And this is actually kind of counter going to work, because this is a different type of work. Doesn't require necessarily as much human labor. There's no one breathing over my shoulder telling me to log in and look at the market. I do it when I want. It doesn't take that long. This is something I can pull up over lunch, check and see what's going on in the market, make the moves that I need to make. And then towards the end of the day, check it again, see what the end of the day is looking like. I have 3 times that I'm definitively looking at it. It's 8:30, beginning of the day when the market opens. I want to see what the prices are then. I don't normally make a trade until around lunch, or at between 2:30 and 3 before market close, because I'm normally taking my afternoon breather, and I'll check it then. And I can make all the moves that I make throughout the day if I need to make them. I don't necessarily always need to make them. It's just moving money in the market. But I also have all day on Fridays. I could manage this portfolio exclusively on Fridays if I wanted to. Wouldn't be an issue, because I'm off Friday. And it would take up maybe 40 minutes of my Friday, if that. Because it doesn't really take me that long. I'm looking, I'm going, am I buying something? Is there money in here? Did I get a payout? It's the only thing that's matter to me. Like, it's not a whole lot to manage. There is work involved. There has to be some strategy and some in-game involved, but doesn't even feel like work to me. And I really enjoy it. I like distributing that income. I like the fact that I can give myself a raise without having to ask anyone. I can take care of me. I'll go out and hunt. I'm really good at hunting in this game. So that's kind of what we're doing. But I'd like to hear you guys' opinion. Is it too good to be true? Am I lost? Am I off the mark? Like, let's talk about it. We're also, obviously, we'll be doing live streams where I will be fielding questions live. You can ask questions down in the comments. There's email on my page. You can email me and I'll answer them on the show. But this is where I'm at. This is what we're doing. And this is the game plan and the goal. We got the numbers locked in. I am dialed in. I'm super excited about this portfolio. I'm loving the way that it's working so far. It's incorporated into my velocity banking, which is speeding up that when I'm dialed in for those months. I can make some headway in a month now. I got a lot of tools that I can use. And when all the chambers are loaded and I get to take those big blasts, it makes me feel good because you're knocking out a few $1,000s of debt versus picking at it. I like to knock it out. I like to do chunks. Makes me feel good. It does. So and that was the reason I was originally doing this, but obviously I suffered a pretty grievous injury and I couldn't work for a month and a half. And that's what got me thinking. I was like, dude, everything is body dependent. I've got to find another game. I got to find another game that I can play. And this is a game that I feel like I can play. And if I'm smart enough to play it, most people are, because I'm not that smart. Just good with numbers. But this has been your boy, Reckless Ray Dinero. And until the next time, well, actually, it's not even next week. I'll see you guys on Wednesday. Definitely tap in on Wednesday. If you haven't liked the video, definitely like the video. If you have not subscribed, tap in with me and subscribe. Even if you hate me, subscribe. Like, the only reason being is because then you can hate on the video and you can see the updates. Because if you hate me now, you really gonna hate me next year. I'm just telling you. And the year after that, you're gonna hate me even more. Like, it's gonna be great because like you're gonna be hating and I'm gonna be growing and you can watch. And eventually you're gonna be on the team because there's plenty of room in the wolf pack and we're not hiding nothing from nobody. So you can do exactly what I'm doing. And then, we can have the conversation. We can have little money fights over who's getting the best passive income. Till next week, people. Till Wednesday, people. It's your boy, Reckless Ray Dinero, and I'm out.
Money on my mind. Yeah. Focus, got no time for games. Nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name. But I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.